Welcome everyone to this webinar that we would like to offer you today as part of the webinar series that UNITAR has started a few months back during the coronavirus pandemic. Today is a very momentous occasion, if you can go to the cover, Julia, to introduce you to a successful practical experience under the initiative that UN Environment mainly is more than that. There are many banks in the financial sector involved, but it is conceived and led by our colleagues at the United Nations Environment Agency on the principles for responsible banking. All what you're going to hear ahead, it's an interesting conversation we hold on how to maintain responsible banking practices during the COVID-19 pandemic. We particularly in these short opening remarks appreciate the support of UNICAJA Banco, UNICAJA Bank from Spain, duly represented today by its Corporate Social Responsibility Director, our friend Jose Maria Lopez. And also in a general comment, I wanted to mention to all of you, dear participants, that both UNEP and UNITAR, UN Environment and UNITAR, have several sources of information, perhaps an invitation for seminars, e-webinars, e-seminars, excuse me, and courses on this topic. So make sure that you visit our websites at the UN Environment, that you can just Google that, or that UNITAR, and you will find us. So with that, and recognizing also the support of our training center in the city of Malaga in Spain, CIFAL Malaga, I would like to start with a short presentation to hopefully put everything in context. And I forgot to say, if I may, my name is Alex Mejia, your friend, co-hosting this webinar today. I have the privilege of being the director of the Division for People and Social Inclusion at UNITAR. And I'm also the head of the CIFAL Global Network, our 19 training centers around the world, including the one in Malaga that I just mentioned. With that, Julia, let's put these things in perspective. And here you can see these numbers every day that I have an opportunity to see them or to read them or to comment on them. I actually have a sour feeling in my mouth and very sad. 58 million persons as confirmed cases, 1 million, let me read the whole number, 1,385,218 persons deceased. That number must be read in its entirety, because just out of respect for the departed, but also because we have to remember that this is more than numbers. This is a lot of human suffering and drama and sadness in these 1,385,218 families or friends or colleagues mourning someone. And I mentioned that because, you know, the coronavirus, I have to say this, at least as a personal comment, when this was March, perhaps April, many of us thought that the coronavirus pandemic by the summer in Europe, perhaps August, September, will be a thing of the past, that this will come and go, as very many pandemics came and went in the past, but this is not the case. We all know that we went from a public health crisis to a social crisis and to an economic crisis. And we will see how the financial sector actually has a primordial, prioritary, substantive role in helping us to move on when the moment comes and hopefully a vaccine is found and administered to the population. As of yesterday, our colleagues at the WHO here in Geneva, very close to where we are, at 5 p.m. on the 23rd of November, have confirmed these numbers. And if you go to the next slide, Julia, just to put things in perspective, in this surrounding situation of the pandemic can be better understood, perhaps, if you look at the numbers per region. And Europe has seen the number of cases decreasing. Thank God the situation is improving, particularly in Geneva. The authorities here are starting to release some of the measures, but that is not the case in the Americas, and particularly North America. You can see there the numbers per region. I'm not going to read them, but this pandemic, unfortunately, is far from over. Next, please. Now, if we try to understand, and again, in my humble effort to try to put this in perspective before we get to the issue at hand today on sustainable financing, there are perhaps 5 transitions from the COVID-19 era, if I can call it like that. And there are some lessons learned from this year, 2020, on the main transformations for our collective future. And we postulate 4. This comes from several documents, but also we have taken the liberty to edit this a little. But if I may, number 1 is perhaps the transformation of the health system, global health system, with a focus on universal health coverage, publicly funded, especially for the most vulnerable. Our Secretary General, I report to Mr. Nikhil, said he's our Director General at UNITAR. He's known as one of the fathers of the Sustainable Development Goal, and he is in constant contact or frequent contact with our Secretary General, the Secretary General of the United Nations, Mr. Antonio Guterres. He has been really adamant in his message and his invitation and his quest to help to motivate national governments, national authorities, to understand that whenever the moment comes after the COVID pandemic, we have to, as he says, build back better. We have to go back to a better new normal. And that's why this premise number 1 that you see there in this slide is an imperative. Universal health coverage is something that the WHO, Dr. Tedros, his Director General, has been working for several years now, working on. But this is an opportunity as well as a challenge, the COVID-19. Hopefully, this will help national governments all over the place understand that UHC, as we call it, universal health coverage, is an imperative, as I say. Number 2, there is a transformation of our food systems to tackle starvation and hunger happening as we speak. And we need to maintain this transformation focused on, hopefully, the most vulnerable. We have also seen attention to obesity, micronutrient deficiency, essentially through sustainable farming at scale. So whenever we have to build back better after the COVID, hopefully our food systems should be better. Number 3, transformation of education systems with better pedagogical and methodological approaches, building on the success of social media and the gaming industry. These are very difficult examples, if I may, but we mention them because we see how teenagers mostly, but also some young adults, really get into gaming, into not gaming, going to a casino, gaming electronically in computer games. I won't mention any, but I'm sure you know, and if you have sons and daughters, you'll understand fully what I'm saying. That type of involvement, several hours per day in front of the screen, this commitment to improve and improve and improve, indeed give us some ideas on how to build back better. And the same on how to connect with social media, but social media used for educational purpose. But getting into the topic at hand, read number 4. Transformation of the energy systems with a focus on renewables and efficiency and access to all modern energy systems. Energy, it's indeed something that is a priority for humanity. The financial sector, as the financing infrastructure requires, has a big role to do on that. And this is a good time to pay attention to it. And number 5 is even more on target. Transformation of the finance industry, especially banks and asset management and investors, to pursue green pathways in their entire operations. And that's why we decided to partner with UNICAJA. By the way, I'm sorry, Jose Maria, I don't mean to embarrass you, but I have to say what we see from here. Your bank, years ago, not as of now, has started that. Now, we have thought that, at least in the case of Spain, I would say also for very much of Europe, in your operations, we see a commitment to do exactly that, pursue green pathways in the whole range of operations that you have. And that's why we have you here today. Thank you for accepting the invitation. And finally, allow me to say in this slide that green financing is to increase the level of financial flows from banking, microcredit, insurance, and investment from the public, private, and not-for-profit sectors to sustainable development priorities. Why? And go to the next slide, please, Julia. I need to accelerate a little. Because if something is happening, is that the sustainable development virtuous process that started at the beginning of 2016 is suffering because of the COVID. This global quest of every nation and government in the world and the whole of society, if I may, is decreasing in its impetus. Why? Because governments, it's an understandable reason, are focused on fighting the pandemic. So the fight against poverty has suffered. We need to go back to it. And to empower that, because capital is important in that quest to make our planet better, we celebrate this era of responsible banking that United Nations Environment has started a few years back. The banking sector, as you know, is responsible for more than 2/3 of all financing globally and 90% in developing countries. It is in developing countries that we are facing, especially in the least developed countries, what we call the LDCs, and perhaps I should say also in SIDS, the small island development states, the most dramatic challenge in relation to the capacity to deliver the sustainable development goals. We need the concourse. We need the involvement of all banks and all actors in this quest. And I'm sure my colleague from UN Environment will tell us how and speak more specifically. Remember, please, that the UN Principles for Responsible Banking are a guide for the global banking industry to respond to, drive, and benefit from a sustainable development economy. They will indeed enable banks around the world to align their strategies with the Sustainable Development Goals and the Paris Agreement on climate change. That's why the United Nations Principles for Responsible Banking are important. Next, and to conclude, I think this is perhaps my last slide. Let me just go back to the COVID in my humble effort to try to put this in context, and so we can have this discussion in a holistic manner. In light of this pandemic, our colleagues, as I say, have developed a platform for banks. I wanted to read this, and again, you're going to hear from the expert. I'm no expert on this, but allow me to say in conclusion, this is a platform for banks to exchange experiences and ideas as they take action to support society and businesses in this unprecedented crisis. The project that the UN Environment has created aims to support customers as well as their communities in the most effective ways. UNEP, or UN Environment Finance Initiative, has compiled a coalition of over 220 banks. That's a number that I wanted to share here, just to express our admiration as UNITAR, as another UN agency. And I think all of us will agree that to mobilize 220 financial institutions from over 60 countries is indeed to be celebrated. But there is still a lot to do, and we will get to hear on that. So let me go back and remind all of you, our participants from very many places, that the principles for responsible banking remain of the utmost importance and priority during the COVID. And with that, let me now give the floor back to my colleague, Julia, again. So she introduced every speaker, and we have an impressive panel ahead. And at the end, I will be very honored to take over again and to moderate this session. Julia, please. Thank you.
Thank you very much, dear Alex, for the valuable opening statements. It's very interesting to hear. And now we will move on to our speakers. Our first speaker is Mr. Jose Maria Lopez Jimenez. He is the CSR, or Corporate Social Responsibility Director at UNICAJA Banco. And dear Mr. Lopez Jimenez, the floor is yours.
Thank you very much. Alex, we really share perhaps all the same values, even the same speech, because you have said some things I was going to say. I will speak very briefly, and perhaps later on we can discuss some of the topics. First of all, I have to say that on behalf of UNICAJA Banco, as head of Corporate Social Responsibility and ESG coordinator, I'm really pleased to participate in this event, co-organized with UNITAR, that is one of our main partners. Thanks, Alex. Have to say thank you as well to your team. And of course, I send my regards to Julie, Oli, and Jose Manuel and the institutions. First of all, I think that at least in a country like Spain, the main responsible practice followed by banks has been continuing to offer our service while our societies were on lockdown. In Spain, banking and insurance, according to the government rules passed on those hard and dramatic days, were considered special activities for the economy. This serves, first of all, to underline the social function developed by banks, which play a key role in our societies during the days of the pandemic, before and probably in the future. We cannot ignore that new non-financial entities are offering financial services in our days, every day more relevant. But anyway, I think that financing the green transition will require anyway the participation of banks. In the last days of 2019 and the first quarter of 2020, before the pandemic, banks were considered an essential partner for the development and the fulfillment of the 2030 agenda, as was shown in the UN Climate Change Conference held in Madrid. Although I consider that in our days, in these days of pandemic, the financial system has two main commitments. First of all, a partnership with public authorities to mitigate and reduce the negative economic and social impact of the pandemic. And in second place, once the health crisis is over, we'll hope as soon as possible keep on supporting the 2030 agenda and the transition to a more sustainable and green world. I think it is important to recall the collective agreement reached by the main institutions of the Spanish financial system with occasion of the climate change conference of Madrid that took place in the month of December. In this complex task we banks have to face in the next months and in the next years, I share with Alex that the principles for responsible banking will be especially relevant for all the things you have to do. In the case of UNICAJA Banco, I can confirm that we are working on joining soon this group of main credit institutions all over the world that follow this high standard. That, along with the recommendations of the Task Force on Climate-Related Financial Disclosures, we consider that represent a solid base on which sustainable finance will be built in the future. Now we have a challenge. We have to convert all these principles, all these wishes into a tangible reality in the forthcoming years. Those ambitious goals will require the effort of each entity. But at the same time, I consider that the support of regulation and supervision will be crucial as well. We have the case of Europe and the European Union taxonomy, that which, among other regulations passed in the last months, will serve so as to set a level playing field to avoid greenwashing and to facilitate the investors' and customers' decision-making process. Just a few weeks ago, for instance, our national bank, the Bank of Spain, passed or published its guide for less significant institutions on climate and environmental risk. At the same time, soon the single supervisory mechanism that is a part of the European Central Bank will approve a guide with the same object, focused especially on risk management and disclosure. All these efforts must be addressed to align finance with the Paris Agreement objectives and the Sustainable Development Goals, like Alex mentioned before. We are banks, we are specialized on finance, and in these days we must acquire new skills to channel our efforts to the fulfillment of these new social and green principles shared by mankind. The help offered by institutions like the United Nations, of course, UNITAR, but as well the environment program will be helpful for all these commitments and all these tasks we have to get through in the following years. I really appreciate, and Alex knows this partnership we have, especially with UNITAR, set up 3 years ago in the case of UNICAJA Banco, and that I hope that continues for the next years. So, well, more or less, this is what I wanted to say. And of course, we can share some other thoughts later on. Thank you.
Thank you so much, Jose Maria.
Thank you so very much for your valuable contribution. And next, we will move on to our next panelist, Ms. Julie Gaudier. She's the Director of Stonehenge Fleming Group and also the Business Development Officer. Ms. Gaudier, the floor is yours.
Thank you, Julia. So I'd first like to start off by thanking you for having me. I'm honored to be able to speak on behalf of the company in regards to how our firm is contributing to responsible banking as a multifamily office and an asset management firm. A little bit about the company, if you haven't heard of us. We are the oldest multifamily office and wealth management company worldwide. Our origins go back to 1873 with Robert Fleming, who had the merchant bank Robert Fleming & Co. The bank was sold to Chase Manhattan, and the Fleming family decided to set up a family office and kept the asset management side of their business to continue to manage the funds for 200 members of the Fleming family, which includes Ian Fleming, the writer of James Bond. The Stonehenge side of the firm was set up in 1976 as a multifamily office in London. It was set up by 3 main South African refugee families that had fled the apartheid times. They had decided to set up in their family office in London, and that created an interest for other South African families to then join them. And today we have approximately 1,000 families. The company is still privately held, and this allows us to retain the core values and the core values that the families had, and allow us to have much more flexibility when it comes to how we want to invest the funds and how the families want to invest the funds. So if we can move on to an important part of our business, and it is philanthropy. Because the company is privately held, the families have really emphasized philanthropy in our investment strategies and how we invest not only the firm's money, but the family's monies as well. It's always been a key part of the company's DNA, and it remains before and after this COVID time. We have an impact and sustainability fund that we run. We currently have about $1 billion of assets that are allocated to specific private equity and charitable foundations, whereby we follow from A to Z how the funds are invested and make sure that there's an actual impact and that the project is sustainable. We focus on certain areas like poverty, reduction of carbon emission, gender diversity, clean water, and sustainable farming. And we have been able to do a lot for the environment and for certain countries, emerging countries that really needed help and funding, also on the ground experience. The goal for our firm is to design sustainable investment strategies, portfolios, and reporting structures that meet specific needs of charitable foundations as well as families. So for certain families that have certain interests, whether it be environmental or reducing poverty in certain countries, specifically in Africa, we will set up specific funds that will invest in these projects, and then we will make sure that the governance is properly in place and we will follow the project from A to Z. So not only do we fund these projects and help our families fund these projects, but we also monitor the success and the impact it's actually having. That being said, sustainable investing is also one of our main drivers in the asset management space. And we work with multiple banks such as Safra Saracen, Fidelity in Ghana, EcoBank, and Investec. And we have actually created specific funds with these banks to invest in specific projects that help to encourage others to invest in these projects. We know that for a long time, sustainable impact were becoming buzzwords, and we wanted to make sure that we were linked to funds and projects that actually had an impact and that were seeing results. So we focus on the solution-driven investments and companies, and we make sure that whichever money we're allocating, families' money or corporate on the company side, we make sure that they're solution driven and that, for example, they're not producing plastic or at least we would be rather interested in investing in the company that recycles plastic. So we are very hands-on and focused on the projects that we partake in. And we have a team of approximately 100 analysts that analyze the projects inside and out and that work with the banks to make sure that the funds are being allocated properly. Because we are a family office, we work with multiple generations. The Fleming family is on its 6th generation, and we work a lot with the next generations and, of course, the millennials now, who are considered to have more of a social conscience and a stronger commitment to sustainability. And therefore, these younger generations are now coming in as clients and basically encouraging the firm to also move in that direction. So, you know, we are interested in having a return, which is important, because if we're talking about fund and banking and financing, there has to be a return on these investments. So we have been quite successful with that, but when we have a return on investments, we can have a reinvestment and the money can keep recycling and can keep generating more impact. So it's important to say that we're not just investing in any project that looks like it. We're not that philanthropic. We're also looking for a return to be able to reinvest. What we've done during COVID-19. So we have a very strong South African base, but we are also working in East and West Africa. I'm currently in Ghana, so I'm on the ground now. We've basically the funds on the sustainable fund side. We've always been investing in pharmaceutical companies, but it happened to be part of our focus during this pandemic to try to allocate more funds to research and development for the vaccines and also for treatment. So the fund itself has allocated more funds into those areas. But on the project side, we have invested over $1 million into some philanthropic and charitable foundations to help with some of the hunger and homeless situations in the UK, for example. We've also provided approximately $3 million in assets to City Harvest, which fed over 1,000 families throughout the entire, and continuing to feed them throughout the entire pandemic. We've funded a foundation called Tikkun that's in South Africa, in Joburg and in Cape Town, that is providing food, PPE, masks, hand sanitizers, to multiple families that are suffering from the pandemic. We have also funded Centerpoint with our families, so we decided to match the families' investments and basically provided, again, help for shelter and food for Centrepoint that's providing shelter for the homeless in the UK. And these are some of the types of projects that we've invested in. So we are not a bank. We work closely with banks that during the pandemic have helped us fund some businesses that were suffering in certain emerging countries, as well as in the UK. And we have taken a position of being of the banks lending to us because of our robust balance sheet, and we've been able to pay the loans back. So we've been a type of microfinancers for businesses across the geographies that we are situated in.
Thank you so very much, Ms. Gaudier. That was really very valuable and very interesting. And I think also the two different perspectives of the private banking sector were very interesting to hear. And especially now that we're migrating over to our colleague from UN Environment Program of the financial part, and we will be able to hear more from that side. Thank you so very much, and I'm sure it will be a enriching conversation after in the Q&A. Next on the floor, I would like to introduce Mr. Walid Rokneddin. Many apologies if I mispronounced your name. He is the Banking Governance and Membership Manager at the UN Environment Finance Initiative. Dear Mr. Rokneddin, the floor is yours.
Thank you very much, Julia, and good morning and good afternoon to all of you and to my fellow panelists. First of all, I would like to sincerely thank UNITAR and their partners for putting together this session and for inviting the UN Environment Finance Initiative to join this discussion, which I'm very pleased to represent today. So as you can see on the slide, my name is Walid Rokneddin. I'm working for the UNEP FI banking team in Geneva, and specifically focusing on the principles for responsible banking as a banking governance and membership manager. Now, before moving on to our main topic today, I would like to give a short introduction on the principles for responsible banking. Alex, you've already done a very good job at introducing them. I'll try to be brief and go a bit more in detail. So you can see on the slides the 6 principles for responsible banking. So they were launched in September 2019. So it's really meant to be a unique framework for ensuring that signatory banks' strategy and practices align with the vision society has set for its future, namely in the Sustainable Development Goals and the Paris Climate Agreement. I think my colleague Jose from CAJA mentioned greenwashing. I think the purpose of this framework is to make sure that there is no greenwashing, and for that, the principal signatories are required to take 3 key steps that ensure the effective implementation of the principles for responsible banking and enable them to continuously improve their impact on and the impact and contribution to society. So first of all, they have to analyze their current impact on people and society. Based on this analysis, they all have to set and publish targets where they have the most significant impact, and of course implement their targets. And once a year, they have to report on their progress implementing those principles. So here, I just want to pause very briefly and discuss the link between those requirements and the current crisis, because I think it's interesting to note how this impact analysis has really helped banks better face the challenges of the crisis, specifically the impact analysis, which helps banks have a better and quicker understanding of the needs, the sustainability needs of their countries, their clients and their customers, and therefore help them to better mitigate the negative impact. So as of today, in November 2020, we are pleased to say that there are 199 signatories from over 60 countries, representing now over 40% of the global banking industry and serving 1.6 billion clients worldwide. So during the COVID-19 crisis and still now, and Alex, you mentioned this at the beginning, thank you for this, UNEP FI has been working to provide a platform for banks to exchange on best practices and facilitate global knowledge. So we've organized a lot of peer learning sessions where we had experts coming, also banks sharing together their initiatives, and also develop a quite comprehensive database with more than 60 banks initiatives. And I strongly encourage you to have a look at this database, which gives you a good understanding of the depth of the response of the financial sector. And in addition to this, we've also organized a working group on the sustainable recovery. As Alex mentioned, I think now the focus is on building back better. and during the end of my presentation, I will also briefly discuss about this. Moving on the next slide and on our main topic today, responsible banking and the COVID-19. I think not being the source of the crisis this time and benefiting, and I'm sure my colleague will agree, on a much more improved capital position, the financial sector and the banking industry is really more able to play its role in keeping businesses operating and communities served. I think for signatories to the principles for responsible banking, it is an opportunity to demonstrate the positive impact that they have, and by responding both to the direct health crisis, which is of course a very important aspect, and also to the wider economic impact. So there are both those dimensions. So those here on the slide are some areas where we see responsible banks making a difference and having a positive impact on society in line with the principles for responsible banking. So first of all, and very importantly, supporting clients and supporting companies, large and small, to sustain their business in line with the principle 3. So here are just some examples I put on the slide. So maintaining business liquidity, deferring payment as revenue dry up, suspending mortgages for household and vulnerable families. And I will also provide some illustrative example in the next slide. The second aspect, and I think also, no, sorry. The second aspect, and a very important one also, is partnering with governments, NGOs, and other stakeholders in managing the economic and social impacts of the measure taken to contain the spread of the virus, namely the lockdown, and in line with the principle 4 on stakeholders. Other important aspects, of course, is ensuring access to key financial services and infrastructure that society relies on for everyday life. Of course, responsibly supporting staff and contractors, and I think my two fellow panelists already provided some good examples there. And of course, and as Alex mentioned, strategically leveraging this opportunity to fast track the sustainable transition to a sustainable and green recovery. And that's a response to this Build Back Better call that we've heard over the last months. So moving on to the next slide, and I apologize for the very crowded slide. So here, as I said, UNEP has been working with our members to provide a platform for banks to exchange. And these are some illustrative examples among many, many others. Once again, I strongly encourage you to have a look at this database. It's very impressive to see the depth of the response from the financial sector. So here, once again, it's some illustrative examples of my propos. First of all, and as mentioned, one of the most important aspects is supporting SMEs, specifically through the government's emergency SME program that many countries have put in place. For example, here I put the example of Spain, where we saw BBVA, Caixa, and Santander committing a large amount of money to support the SME emergency program. In Switzerland, we have also seen banks such as UBS and Credit Suisse partnering with the governments to roll out bridge loans for the country industry. Of course, I can also mention in the UK, banks supporting the coronavirus large business interruption scheme and the corporate finance facility. And in China as well, we have seen banks working very closely with regulators. And I think, Jose, you've mentioned this, to fast track loans and extensions. A second aspect, and as discussed in my previous slide, is regarding responsibly supporting staff and contractors. There are many initiatives that have been put in place. So here you have put the example of Bankia, who continue to pay their service providers to keep their employees on staff, even when the services cannot be delivered in the crisis. And also the example of Banca NPS in Italy, who has advanced unemployment benefits to employees laid off during the crisis. Another very interesting topic and aspect that we've seen during the crisis, and I think it was one of the first time that we've seen this, was leveraging dividend policies, in line with the European Commission recommendation. So here we have seen a lot of banks either stopping or reducing to pay out dividends. We have also seen banks reducing the salary and bonuses of senior management to fund medical equipment and foundation work. So here I put the example of Santander and UNICAJA. Another very important aspect of this is, of course, supporting the health system that desperately needed support, specifically at the beginning of the crisis, where they lacked a lot of medical equipment, such as the mask and and the mask, yes, sorry. So for example, here we have seen the example of BBVA donating ventilators, creating a donation fund. We have seen BNP Paribas providing masks as well to hospitals. And another example also is Banco Pichincha in Ecuador creating this 10 million fund to purchase medical supplies. So once again, these are illustrative examples, and I strongly encourage you to have a look at this database to see more examples. Moving on to the next slide. So here, I just wanted to mention how banks could use this opportunity to increase financial inclusion, because as you know, close to 1/3 of adults are still unbanked as of today. Financial inclusion play a critical role in achieving several of the 17 SDGs, specifically in emerging markets where micro businesses, SMEs, and informal jobs are the engine and the backbone of the economy. And under lockdown, those businesses have been hardly hit, and with that, their incomes. The banking sector, in collaboration with stakeholders, will play a key role, a key part in the recovery of the economy after the crisis, and of course in reducing poverty and increasing future financial participation. So here again, I've put some 4 thoughts and examples on how responsible banks can act to increase financial inclusion, both during the crisis and also in the recovery phase. So for example, they can of course support the micro businesses, SMEs, and informal jobs to mitigate income loss due to lockdown. I think we've seen a lot of development of digital solution, and services to, first of all, provide convenient, affordable, and safe access to fund and increase financial inclusion. We've also seen those digital solutions and communication channels to help small businesses manage their businessing during this difficult time. We've seen a lot of educational videos and other tools such as this to support the financial inclusion and the businesses. And finally, another example could be the partnering with large corporate clients to structure the supply chain finance program to offer financial solutions to small businesses, suppliers across the value chain. Once again, those are also illustrative examples, and there are many, many other examples of what banks have done. And moving on to our last slide. And once again, Alex, you've done a very good job at emphasizing the need for building back better. As we rebuild the economies, many calls from government, industry, and citizens, and of course the United Nations, have called to build back better, including by using the rebuilding to create a greener and more inclusive economy and society. So a coordinated response from governments, regulators, the private sector, and civil society is important now, and will continue to be as we build back more resilient society and economies. Here again, the banking industry has a key role to play in enabling a green and inclusive recovery. Here I'll put some opportunities. So throughout the summer, we've conducted some interviews with our PRB signatories to discuss initial thinking and concrete example on how banks can leverage this opportunity to enable a green and inclusive recovery. So here I'll put 3 main areas that banks have identified. The first one is, of course, enhancing engagement with governments regarding the recovery. Here, banks are uniquely positioned to help governments succeed in supporting post-pandemic recovery. Of course, we've seen a lot of recovery package by many governments, some brown, some green, and here banks can play a key role in ensuring that the funds are channeling through the right institution and the right companies. And they play a great role in making sure that governments can meet their ambitious climate targets. Very recently, again, we've heard China making the net zero commitment, Japan, Sweden, and we hope maybe that now that Biden is elected, the United Nations will follow shortly. Specifically, banks can support on advocating for green recovery and with partnering with governments. Another aspect is supporting a sectoral and place-based transition. Here also I've put some example on how banks can work on accelerating data-driven analysis, improving assessment of social and climate change risk, and developing innovating financing products. Here I would just like to mention one of our leading group of PRB banks, specifically working on this topic under the PRB umbrella. It's called the Collective Commitment to Climate Actions. There are 38 banks committed to support the transition to a net zero economy by 2050 and to align their portfolio with the global climate goals to limit warming to well below 2 degrees and striving for 1.5 degrees Celsius. So this is an example of climate initiative that will help fast track this transition. And finally, my final point is around the organizational adaptability and how to use the learning of the crisis to accelerate the transition to a sustainable economy. one very interesting example is how banks have set up cross-unit and cross-departmental team to respond to the challenges of the crisis. And these are typically the type of cross-cutting team with different skills and expertise and governance structure that should be put in place to respond to the sustainability needs. And just moving on to the last slide, here I put the link to this database, and I've put my contacts in case you want to have more information on any of these topics. And I'm sure I've way over my time, and I apologize for this.
Thank you, Walid, for really the practical perspective also from the UN side in regards to responsible banking and building back better after the COVID-19 pandemic. And I'm sure I've seen in the Q&A, there are quite a few questions that really revolve around the private sector and also what the UN is doing. So looking forward for that later. Now we will go on to our last but not least panelist, Mr. Jose Manuel Marquez. He is the head of the Financial Innovation Division of the Bank of Spain. I welcome you to the floor, Mr. Marquez.
Thanks, Julia. First of all, let me thank the organizers, UNITAR, UNICAJA, have invited me to this forum, and congratulate them to make this possibility to explain what things we should do in order to improve the alignment of the banking sector and the financial sector to achieve the Sustainable Development Goals. I will begin with something unusual, and is to say what I'm not going to speak about, and I will not speak about the importance of the financial sector for reaching the targets of the Paris Agreement of the Sustainable Development Goals. I think that we already did a lot during the last year in order to be combined that this is critical, the involvement of the financial sector. I'm not going to enter into details on a lot of initiatives that the previous speakers put a lot of them on the table, and I have very little to add on this one. Or speaking about the role of the central banks or the regulator on this area, it could be very boring for your side. But I would like to give us an overview of what is our perspective of what are the main points that a manager of bank or a bank should do nowadays in order to achieve the responsible banking practices. And we think that basically there are four important things that banks should take into account. And here you have basically all of them. That is, first of all, is take into account what is happening on the regulatory side. Second is to rethink or to try to adapt the banking business model and the banking organization to the sustainability, because the sustainability should be or will be in the middle of the strategy of the bank. Third, and is related with the previous, is very related with the previous one, is to rethink the global risk map and the way the banks perform the risk assessment. And last but not least, is related with the use of the digitalization and the interlink between these two important forces in the changing of the society, that is the new technologies and the importance of the sustainable development. If we can pass to the next slide. Yeah, that is on the regulatory landscape. Basically, here there are a lot of initiatives, there are a lot of things to take into account. Here I summarize the most important of them. Basically, on the international side, you have a lot of things happening now, and the banking managers will take into account. The first one of them are all the things promoted by the G20. As you know, after the Paris Agreement, the G20 creates some groups that begin to discuss around the importance of sustainable finance. This was created with the presidency of China, was continued by the next presidencies, by Argentina one, by the Germany one, and so on. Then there are a lot of initiatives that came from this G20 presidency. The last presidencies were less active on this area, but it's expected that the new presidency that will be under the Italian government and incorporates definitely change of view from United States will be more active on this area. Then it's forecast this will be an important push for initiatives at a global side. The other area is related with the 20s is all the work with the Financial Stability Board. And here, basically, you have two areas. One area is monitor the risk on related with climate risk, and the other area that already has been mentioned is all the work from the task force on climate risk disclosure. That is very important in order to begin to have some information on the climate risk and take into account in order to analyze the risk assessment and other things that need to be changed. And the last point I want to mention on this international side is the work of the Basel Committee. The Basel Committee, that, as you know, is an agreement about the prudential rules that need to be applied by all the banks. It's a voluntary agreement, but it's followed by a lot of jurisdiction. Is beginning to discuss how to incorporate all these risks on the prudential requirements. Then this could imply a lot of important recommendations that will be followed for a lot of jurisdiction. On the European side, there are a lot of action, and here you have the action plan from the European Commission that cover a lot of issues. I will mention very briefly in the next slide, but also the work from the supervisory side, from the SSM, the Single Supervision Mechanism, from the ECB, or also from the European Banking Authority and many other authorities on the European side. We can pass to the next slide. Then basically the banks will take into account that they will need to face some issues both on the compulsory side, but also on the voluntary side. Here you have some important issues for a European bank, for example. Basically, you have important achievements from the benchmarks that are going to be introduced for the climate transition benchmark, or for the Paris aligned benchmark, but also related with the information that you have to provide to the investors, and this is related with change in the directive of investors in the market, and the so-called MiFID II. You will have also important dates related with the taxonomy, with the disclosures, or with other issues. And on the voluntary side, you have most of the recommendations from the task force of the FSB that are voluntary, but obviously, given the number of banks that used to take into account, are important to take into account to introduce on your decision. Basically, this is an important scenario of how important from the banking side are this kind of transition risks, to take into account all what is happening and need to be complied. The next slide basically provides you an overview. Okay, it's not only important to take into account all the regulatory actions that need to be complied, or all the recommendations that need to be complied, but also to review in some way the strategy and the business model. Here you have a chart that came from a discussion paper from the European Banking Authority, published on this year, that is open in this discussion until the February of the next year, and basically proposed that each bank should review these four aspects. That is, to review the long-term resilience. This is how your business model is compatible in the long term with all the requirements that came from sustainable side. Also need to review and integrate risk in the related with, for example, climate change in the risk assessment. Should also improve the engagement with the customers, and should review the offering of new products. In particular, one survey performed this year basically said that almost 3/4 of the respondents, or banks responding this survey, basically either are creating new products in order to take into account sustainability, or basically are developing new products in order to take this into account. But it's not also important to review all these parts, but also, as some colleagues mentioned, is to review or to decide how you want to organize this sustainability area inside of your institution. This is no longer one thing basically related with social responsibility or with some kind of communication, but it's related intrinsically with the strategy of your institution, because it will affect the new customers, it will affect your risk assessment, it will affect your new opportunities, then the way to introduce it, you will do in a decentralized or decentralized way, how you will report to the board of directors, how you will recognize this one is critical, and each bank, depending on the organization, on the way they use to analyze risk or to take into account new initiatives, should give a room for this sustainability target. I would like to spend one slide, and this will be the slide, talking about the development of the new product that is in this previous slide. Basically, this development or creation of new products, first of all, it's not only a question of trying to obtain new customers or trying to give some answer to the demand of sustainable products, but it's also, and it's very important, trying to transform the stock of the balance sheet that you have. Basically, all the banks have a balance sheet that is affected in some way, in a very heavy way in some cases, to the climate risk, for example, and you should develop ways to transform and to reduce this exposure. The point of this slide is to put on the table that it's not only the green bond. There are many products that now are in the market. There are many possibilities. Some of them are very useful in order to cover or to hedge the climate risk. Some others is very good in order to transform the society, and some others is good in order to transform the exposure of your customers. And there are many fields. That is from the marketable products, you have the best known, that is the green, the social sustainable bonds, but also there are new figures like, for example, transition or sustainable linked bond, that basically where basically the return of the bond is linked to some of the sustainable development goals. You didn't achieve this one, you have to pay more. If you achieve this one, you will pay less. But also in the cover bonds related with the mortgage, you have also some initiatives that recognize which one are green or which one are not green. So on the securitization right side, there are also some products. On the non-marketable securities, you have many examples, like, for example, green loans, also frameworks in the transactional banking in order to create products related with short-term finance that also are related with sustainable objectives, or credit lines, guarantees, etc. And even in the derivative side, you have several ways in order to insure or to provide insurance against the physical risk. And I would like to mention also that on the retail side, you have a credit card or mortgage that can help the customers, the retail side, to, for example, to control better their exposure on the daily activity to climate risk, or to improve the efficiency of the housing. These are important products that need to be developed, and we have in the last years we have an emergence of these products, and basically they are gaining traction, and they are becoming more and more important, and it's important for the banking sector to think about this origination side. The other aspect that is very important is the risk management. This is in the next slide. I will be fast. Basically here, what you need to review is, okay, your risk framework should take into account both things. That is not only what is more typical, the risk side, and here you should be very structured, very organized about the transition risk, the physical risk, how to measure it. This is the most complicated, how to provide some metric of all these risks that usually are complicated to grasp. But also, and this is maybe the less developed side, the opportunities that came from this changing of the exposure of climate or sustainable risk. Once that you take all this into account, you should put on your strategic planning. And another thing that is complicated, and now I think many banks are working on that, is how to translate this one into financial impact. This most of the economic model or the risk models are not very well developed, and even on the academic side, there are a lot of people working on that. And okay, you have to give some impact of this one on the income statement, on the balance sheet, on the cash flow, and decide what will be your exposure, what will be your situation regarding all this risk. Here, there are again two approaches. One is a bottom up, that is where basically each unit takes this into account, and you put some limits, and then you rise to the top in order to know or to be aware of what is your exposure to this one, or a top down where the management decides an allocation and change completely the rules, and then each of the units will follow these rules. And the last part I would like to mention, and is the last item of my presentation, is the thing related with the digital digitalization and this link between digitalization and sustainable development. Here I will like, maybe it's the less developed side. This is one of the recommendations from the G20 in the last G20s, and basically in 2018 is created a task force, a high-level group from United Nations in order to think and strategic in order to link these two things, the digital side with the sustainable finance. And the final report was published just on August of this year. Here, in this report, you can find, this is in the next slide, you can find the main high-level recommendation of what could be done in order to achieve this one. But one thing that they found of particular interest is that you also can find what is called a Pathfinder initiative. That basically is a review of experience of different proposals from fintech or from new technologies that basically are using these digital possibilities in order to manage and in order to improve the sustainable finance. There are three countries that provide examples of how can this mapping inside of the country be done. And the idea of this one is to put in common and to raise opportunities or ideas in other countries in order to achieve this iteration between digitalization and sustainable targets. In the last slide, and I conclude in order to give some room to the question and answers. In the last slide, you can have some examples that we found in Spain in order to have an overview of what kind of technologies are we thinking. The first one is Clarity Artificial Intelligence. Basically, it's one company that what they are doing is to compile for each company, for each firm, several metrics on sustainable objectives. And based on artificial intelligence, they try to provide the best selection of what will be the best metrics they need to follow in order to be able to discriminate which of the providers of information on this one will be better. The other one, that is Greencon, basically is using some recognition of the invoices of water, electricity, of many things of one firms in order to obtain information about this information, be able with a huge database, again with the use of artificial intelligence, to perform two things. The first one is to provide some estimation of the carbon footprint, and the other one is to make some recommendation of which action could be introduced in a firm in order to reduce this carbon footprint. You have another one that is funding, that basically is a crowdfunding firm that related with renewable energies, where the quantity is low in order to provide a lot of investors to participate on this one. It's 500 euros. And last, you have a climate trade that basically do a lot of things, but one of the things that they try to do is to create a blockchain platform in order to improve the exchange on ETS, that is on carbon emissions from the firms in a transparent and in a credible way. Then, as you can see, there are many initiatives, there are many things that you can use with digital technologies in order to improve, and that can be very helpful for the banking sector. That's all. I'm very happy to answer any questions. That's all.
Thank you very much, Jose Manuel. Thank you to all of you, distinguished panelists, to Julia for helping us with this part of the webinar. Let me give you a general reaction, and then, if I may, kindly ask you, each one of you, a question, and perhaps I will go in the same order that we use for you to speak. You did a great job indeed in giving us the perspective from your side. As you heard, distinguished participants, we had a bank in Spain, we had a global investment banker or wealth management company. And we had a United Nations agency also telling us about the framework that is being used. And last, we had a regulator of the highest level, the head of an important division of the Bank of Spain, telling us the legal framework and how a national governing institution, part of a national government, sees this. So quite an amalgamation of perspectives. And in giving you this initial reaction from my side as the moderator, I would like to tell you that we have approximately 60 participants, and I'm very happy to see, I need to mention something before. When we promoted this event, Julia did a great job. We sent this to the 19 directors of the 19 training centers that UNITAR has around the world. And we do have, is mostly people representing financial institutions from, I think, 17 or so of these 19 countries. So the number per country perhaps of participants is not that high, but it is a global perspective. And if you have read already some of the comments, you have comments from Africa, from Latin America, from parts of Asia, from Europe, of course, and so on. So these perspectives from the panelists and the audience that we have lead me to ask you to perhaps go a little deeper in the role that you have in your institutions. Let me begin with Jose Maria. At UNICAJA Bank, mostly in Spain, tell us, Jose Maria, what is the real motivation? You have mentioned this to me. I privately had the pleasure of meeting with the president of your bank, and he also mentioned this in passing. I like this approach that sustainability is actually good business, that you know, this is feasible, that is not just something that a prestigious bank like yours will do because, you know, it's part of the responsibility to our society. This is actually the development of these new products, the vision of the future of UNICAJA Bank in this case is actually a very financially sustainable idea. So please tell us, how does this happen in a bank? You see this at the highest level, including the conversations with your board that I have witnessed. Why is UNICAJA Banco getting into this thing? What is the motivation? To you, Jose Maria.
Thank you, Alex. Well, I think the main motivation is we believe in this new paradigm, in this new way of doing things and doing banking. Of course, there is a big pressure coming from regulators, supervisors, but beyond that, we really think in the real purpose of sustainable finance, the good effects for our society and for environment. And of course, it was mentioned before, I think this is a perfect way for both following a new business. We have to set a new business model, and in this new business model we have to put in the financial topics and the non-financial topics. It is something quite complex, but it is something we have to do. Of course, we banks and big corporations especially have devoted too much attention to the strictly financial topics, but now we have to look beyond and we have to see the effect of our actions, of our business model in society and how society is impacting us. So this new paradigm of sustainability is offering us a perfect tool to fulfill this point of view.
Thank you. Thank you. Very practical motivation because it's not only something that must be done, but it's something that is strategically feasible, as we say. And thank you for sharing the view, particularly from UNICAJA. Now, if I can invite Julie now to talk a little about something that was quite interesting for me to hear from a practical point of view from Stonehenge Fleming. You had a slide on these 4 pillars, this amalgamation, a beautiful thing to put it together because We at the UN, of course, we try to be practical, but we also like to create theoretical models and frameworks that people can relate to, and then hopefully motivate them to follow. Exactly. Thank you, Julia. You're always very proactive. These 4 pillars for sustainable investment, quite interesting to see the role that you give, not only to the obvious, of course, which is financial capital, intellectual capital that everyone sees, but also to cultural and social capital. So, Julie, may I invite you to explain a little further this model so it can serve perhaps as an example for a representative of other financial institutions that are listening to this. Why is this a holistic approach? Can you tell us a little more about that?
Yes. So I think coming from a firm that is run and managed by family members, they started realizing that it's all fine and dandy to talk about financial rewards and money, but that in today's world, if you don't invest in intellectual capital, education, knowledge, educating people, if you don't invest in social, helping help impoverished countries get out of poverty, if you're not putting your money in areas where the world will remain sustainable, it's not going to exist anymore anyways. And these families have made a certain amount of wealth, and they're realizing now that they want to feel good about things, and in order to feel good within their own families and the way that they're investing their money, they want to have an impact on the world. And we realized also as a financial institution that these families don't only want to hear about return, they want to hear about how culturally we're diversifying their investments, how we're helping emerging countries, how we are helping children get educated to help with reducing poverty, how we're helping intellectual capital so that other countries can get up to date with medical treatments and to help their own communities. So we're realizing that there's a lot of elements that need to be included in discussions and the way that people are investing their money today. And a lot of these thoughts and patterns have actually come from the younger generations that are really passionate about it and that are trying to encourage their parents and other members of their entourage to invest in more impact and more important, or what they at least think is more important in today's world.
Thank you very much indeed. If you pay attention, just a short reaction, Julie, if you pay attention to the name that we chose for this webinar, what we postulated is that responsible banking practices should be maintained during the COVID. Your institution is indeed an example. Thank you for sharing the things that you are doing in Africa and in other places, and how families manage their wealth. Very particular issue that I would like to complement here from the point of view of UNICAJA and now from the point of view of Stonehenge and Fleming. Excuse me. You can see that people will have the initial reaction that, oh, it's the COVID, so this is not sustainable anymore. Oh, it's the COVID, we have to focus on keeping the business alive. You are showing us that it is possible to maintain responsible business and finance practices during the COVID, even more of a reason. I thank you for that. I thank you for explaining better the 4 pillars in a practical way, because as I say, it can be inspiration for people listening today. Thank you, Julie. Let me go now to you, to Walid and UN Environment. 2 questions, if I may. I'm using of your patience as my colleague, Walid. One, tell us the view in the next, I don't know, 3 years, 5 years, and so on, that you have for this initiative that you have launched, this portfolio of banks. You mentioned 119, apologies that I mentioned 220, but yes, 200 banks is an impressive number indeed. Do you expect this to keep growing within the COVID? Because as we are saying, and I am sure, Some banks, it's always the dichotomy between the urgent and the important. This is important, but sometimes some people won't see that as urgent. So number one, the forecast that you have, and number two, very practical. What must a bank do to join? As I say, and we have seen the registrations and the institutions represented, is mostly the people listening today. What a privilege for us. Is mostly financial institutions from several countries. So can you tell them what is it that they need to do to join and adhere? Please, Wally.
Alex, thank you very much for these two questions. I feel very lucky for having two questions instead of one. I think the first one regarding the forecast. One important thing to mention, and I think all of us at the Secretariat were quite surprised, is to see the level of engagement we had during the crisis. Actually, it did not decrease, it increased during the crisis. And I think it reflects very well that banks takes very seriously the role they have to play in maintaining the supporting society, businesses, etc. during the crisis, and also the value they put into collaboration. Here, I always like to quote one of our bank CEO saying that collaboration is the new competition, right? And I think many banks are starting to understand this. In terms of the forecast, as you said, there are now more than 199 banks. I think the most important thing now is working on implementing the principles for responsible banking and implementing those key requirements that bank committed to do. Analyze their impact and having this holistic view on their impact, setting concrete and credible targets and achieve those targets. I think the main focus now is about the implementation of the principles and making sure that all banks deliver on their commitments. And of course, the United Nations Environment Finance Initiative is here to support all the signatories to do this. And then on the process to become a signatory, it's actually quite a simple process. So all banks have to do is having their CEO sign the commitment of the principles for responsible banking and become a member of the UNEP FI Secretariat. And for that, as I said, I've put my email address in the slide. I don't know if the slide will be circulated, but any banks interested to join, it's an easy process. We provide a lot of support throughout the process. And please feel free to reach out to me if you are interested in joining. And I've heard that Mr. Jose Lopez is already interested in joining. I look forward to seeing you in a subsequent call. I hope it answers the question, Alex.
Indeed, part of what we do here is that we send the commercial because we are the United Nations, and our job is exactly that, is to mobilize societies, to mobilize institutions. And yes, indeed, I do hope that the Bank of Spain, UNICAJA, and many other financial institutions do join. Now, last but not least, to Jose Manuel. Thank you, Jose Manuel, for an impressive job in giving us this framework, this view of the whole, and particularly on one thing that I was very interested in, and allow me to be less than humble and to mention something that was a great privilege in my life. I'm a former Deputy Minister of Economy and Finance of the Republic of Ecuador. I come from Ecuador in South America. And I remember my engagements and that of my government with the Bank of Spain and how much we learned from your institution. But something interesting that I mentioned from that previous experience of mine before joining the UN is that I remember these the Basel rules, of course, and the dichotomy between enforcing Basel and at the same time listening to the private financial institutions trying to manage risk in a way that somehow doesn't hinder growth. And you put this slide that I asked Julia to put on the screen. This, of course, goes beyond sustainable banking practices and beyond integrating climate change in the global risk map. But indeed, it can be used for that. But in general, if I may ask Jose Manuel, tell us a little more. You say these two approaches. I like that. From the bottom up, so the actual staff of an institution say, we can do that. We can impose these targets. And normally, in this example, in reducing the carbon footprint, but in many other sites, and particularly during the COVID pandemic, but also top down, the board of directors saying, this is it. This is what we have to do. This is responsible with society, and we have to protect the environment. So here it is. Or with the COVID, this is what we need to do. Alid gave us several examples of board of directors of banks all over the place saying, we will donate in this, we will invest on that. We will even use I think it was a bank in France, from our stock of masks and protective equipment, and we will give it to the public health system and so on. So, Jose Manuel, can you tell us a little more in this setting of a new view for the financial sector on how to manage risk? The floor is yours. Thank you.
It's a very intriguing and very complicated issue. I guess that there are several things that you need to take into account. Obviously, the first one is the lack of information, and this is maybe the most important thing in order to begin to manage and to assess risk. And here you have first you have to understand where you can have reliable information. You have to, there are several standards, there are several recommendations, then you have to be clever in order to put your effort in the one that could be more important. This is not an easy task. I can give you some example. We very recently performed an analysis based on text extraction and using also artificial intelligence in order to obtain information for several reports from banks in order to know what they are publishing about climate risk. The information is very sparse, there are very low level of standardization. Then the first thing that you have to work in order to have a good risk assessment is in the data providers and the data in the data side. Then I guess that moreover you have another difficulty compared with other risk assessment cases, like for example in the Basel II, Basel I framework, and is that in this case everyone has a high level of uncertainty. That is, you do not have good models, you do not have good information, you don't know how exactly are you going to build. We are basically, from the regulatory side, we are beginning to build stress test scenarios for climate risk in order to understand the risk. Then everyone is in a first step position, but at the same time, you know that the timing is very short and that you are going to have a lot of improvement and a lot of recommendation in short time. Then it's very difficult. And I guess that these difficulties and this decision, okay, you should take decision taking into account that you don't have very good models, you don't have good information, but this is important. This is what makes you, first one is, okay, what you would like to have. Basically, the more technical areas beginning to work on this one and then rise step by step toward the hierarchy in order to take decisions because they don't have a lot of information. Or just basically, okay, think where you want your bank will be in 5 years, taking into account all the things that could happen in the world, digitalization, sustainability, social inequality, everything that you should take into account. Think how your institution will match with this society in 5 years, and then put a lot of pressure on your areas in order to take this into account, even that you know that there are not enough tools in order to do that, and you need a lot of effort. Then it's really complicated, and I understand both schemes, but unfortunately, a lot of people are working on that from several areas, from the regulatory side, from the academic side, from the practitioners, from the rating agencies. That I think that everyone is involved in this one, and the work in the last years has been impressive, and I completely see that in the next 1 or 2 years the work will continue at a similar path, and we have a lot of advances. But at this moment of time, you should take decision on how to position on this area.
Thank you. Thank you indeed. That's a good way to see it. And again, thank you for very holistic commentaries. You are making us think hard, and that's the idea here. But I appreciate the view from the Bank of Spain and as a regulator indeed, on how all regulators perhaps should see it. Now, let me go to the last, we did the round, and in concluding this moderation, because unfortunately we have run out of time. It's always the case. The conversations are very interesting, but time is limited. I would like to pose a general comment to any of you. Quite interesting, because we received questions. You can see that in the Q&A, all the panelists, from many people. I think this one is from Zimbabwe or Botswana. I'm not sure, but it says something like, how can you involve, how can you mobilize senior people, older persons? I think the question mentioned between 60 and 80 years of age. How can they be part of this new view of the financial system? And in that sense, to any of you, the floor is open. Perhaps, if I may invite you, Julie, you have this view more on the personal side because of what the Stonehenge and Fleming is. How can we include senior people, please?
What we've been trying to do is, as we all know, it's very difficult to implement change and changing mentalities, especially from certain people who are set in their ways, which at some point, you know, if we aren't already, we will end up being set in our ways. So that being said, how we usually do it is that we pair them up with other we pair up the generations with different generations. So we'll pair up in a group, we'll pair up older people with younger people, and we'll be mitigating the conversation so that everybody listens to each other. And we try to demonstrate how society has evolved and the positive things from these young people coming into that will end up making decisions in the future. And we try to get these older generations to understand that the world needs to continue and that these younger generations need to have a say in what and how they think. So it's more psychology than anything else. But if you communicate clearly and they understand the benefits, again, it's an education piece. Indeed. And it's mixing generations, different views together. Even though people are set in their ways, having an open conversation usually allows for at least communication and sometimes instills change.
Very much so. Very much so. And as they say, we are all in this together. So yes. Especially all the persons with all their experience and with their access to capital, in some cases, they remain vibrant here. And I thank you, Julie, for those comments. And listen, I apologize because we went almost 10 minutes over the time that we had allotted, but I think it was an important conversation, and it's only the first but not the last. We will aim to do the same thing that we have done here for Ibero-America. We have several offices, we have 7 offices as UNITAR in Latin America, and 2 in North America, 3 in North America. And I know that UN Environment has even more offices in the Americas. So with UNICAJA, we aim to join forces again to hopefully repeat this in Spanish. And all of you are invited to participate, even if we can offer translation. But with that announcement, I would like again to thank the Bank of Spain, to thank UNICAJA Bank, to thank Stonehenge Fleming, and particularly our colleagues from UN Environment. You all did an excellent job. And to all of you, dear participants, my appreciation, and on behalf of UNITAR, thank you very, very much for joining us today. With this, we adjourn this webinar. Have a good day. Bye-bye.
Thank you very much.
Thank you very much, Alex.
Thank you.
Bye-bye. Bye-bye.
Bye.